Oh, welcome into another daily editorial here on the KE Report. I am chatting with Jordan Roy-Byrne, founder and editor of the Daily Gold. And Jordan, I want to talk about some moves that we're seeing today in the markets related to gold and the US dollar. We have, over the last, year plus, seen this positive correlation between gold and the US dollar. Both have been moving up together, gold moving up more aggressively than the dollar, but the argument very much has been that there is this just general move to more safe assets, and that's why gold and the US dollar have been moving up. However, today we're seeing the dollar break down. It's now down below that 98 level, and gold is moving up. Gold's only up about $8, but that's 0.5%, and there's not a whole lot of news out there that would be driving these moves, so I think there might be a little bit of a correlation, inverse correlation happening here, where the dollar selling off, and that is helping support gold, even while it was correcting the last couple days. What do you think about the nuance today that we're seeing between dollar down, gold up?
Well, if this continues, it reminds me a little bit of what happened in 2017. But in the bigger picture, as far as the last 6 to 12 months or so, and right now, there was concern that we'd go into a global recession, potential bear market in the U.S. and the Fed at the end of last year. That was their last hike. They quickly went into cutting mode, and so predictably, that was very positive for precious metals. Stocks went sideways. It was really positive for bonds. So a lot of capital moved into bonds, especially gold to a lesser degree. Some of that moved out of stocks, but stocks held up pretty well. I mean, that was also supportive of a stronger dollar. Now, if we look at the dollar chart, Corey, there's a potential double top recently, and I'm not sure if this is some major double top. You're right, it's a short-term phenomenon. We're seeing the dollar crack a little bit. It's down below 98. It's possible it could come down to 96 or so. I'm not really sure if it's going to go farther than that or have a big rebound. I just don't know. But what I do think, Corey, is if this is a new point of dollar weakness, it could be a reflection of the global economy stabilizing and rebounding, and not the global economy or the U.S. going into global recession. So if this persists, it could represent a shift in capital going into safe haven assets. And so that, for the most part, is going to benefit global equities ex the U.S., but also the U.S. a little bit, because if we're not going to go into a global recession, we're probably not going to go into a recession in the U.S. And so while that's more positive for the rest of the world, it's also positive for the U.S. So it's really positive for global equities if we see the dollar crack more, at least in the immediate sense. And so because of the way capital is moving, it's not really a major driver of precious metals right now. No, on a day-to-day basis like you have today, you have the dollar cracking a little bit more. Gold's benefiting. Gold stocks are having a little rally. I mean, that's all good and fine, but it's not. It's not that significant. It's not changing the fact that precious metals are in a correction and that the recent highs they made are not. They're not going to be broken anytime soon, basically. Now, if this trend really persists and continues well into next year, that's when we have to watch inflation expectations and inflation, because that's the other way gold can do well. If we see this rally in bond yields, really start to gain traction, and we see the yield curve steepen, and then the Fed says, well, we're gonna remain in pause mode, and we're never gonna hike rates, and even if inflation is going up, that's the inflationary situation where precious metals can start to get a bid, Corey. But it's going to take time for us to get from the point where we are now, where it's, okay, rate cuts are bullish for precious metals, to the point when, okay, inflation is starting to rise and no rate cuts and that scenario is bullish for precious metals. So, the market is digesting all these things, but if we were to go to that inflation scenario, that's going to take at least several months to develop. So that's where we are here now, Corey, and that's why this move lower in the dollar is temporarily it helps precious metals, but it's not changing the fact that they're in a correction for the time being.
Okay, so a couple push and pull factors for the gold price, and we can talk a little bit more about inflation, but the comment that you made that maybe it's because the rest of the world, especially currencies, are doing better, and that's what's pushing the dollar down. We are seeing the British pound do well today, but you know what, that's also on the back of some more optimistic talk around Brexit and not having to go through a hard Brexit. But what are you going to be watching when it comes to some of the other currencies, some of the other countries, to potentially validate that argument that the dollar's moving down, not because the U.S. is so weak, but because of some other countries finally starting to get their footing under them?
Well, for the most part, I'll be watching global equity markets because they discount the equity markets, or the market itself is a discounting mechanism. It anticipates things in advance. So if we start to see a rally gain traction in emerging market equities, for example. I know they're coming. They're right now they're trading around some significant resistance. So if they can punch above that, that would be good. If we see equity markets in Europe, I know Germany's having issues, but if other equity markets in Europe start to strengthen, we see our market break out the U.S. market break out to a new all-time high. If we start to see, more of a rebound in commodity prices and the dollar decline gains a bit more traction with all these things happening, that would start to validate that scenario. So it's really what's going on in the markets more so than news, because if these things gain traction, Corey, then a month or two after that was happening, we'd start to see news. Well, consumers around the rest of the world are more optimistic. Looks like economic data has bottomed. That's the type of. I don't really care about the news that much because that's just lagging. That's all lagging information. And I'm not an economist, so I can't interpret that and use that to predict what's going to happen. I would just say continue to watch the markets. Watch emerging markets. They're coming up on some resistance. Watch global market indices. See where they go. And if they continue to move higher and break above some resistance and the dollar in tandem is moving lower, then, that could be a signal that, this new trend could be something that's sustainable into, well into 2020. And it could be similar to what we saw in 2017, where every market really did well and the dollar going down was a real driver. However, precious metals, in 2017, they only did well because they had a huge correction at the end of 2016 down to that bottom. But they did not on the dollar weakness in 2017, Corey. While statistically it was really big because of the calendar year, precious metals did not. Gold kind of came up close to the 2016 highs, but the gold stocks were nowhere even close to coming back to their 2016 highs in 2017. So I know I'm getting ahead of myself, but the potential for 2020 to be similar to 2017, at least the beginning of 2020, something to keep in mind. I'm not predicting that's going to happen, but we, again, as investors and traders, we have to look at what's happening and kind of anticipate potential scenarios, over the months ahead. And, the last point I'll make on that, Corey, is, if that scenario kind of peters out and it doesn't play out, the other side of that would be the Fed after, they decide not to cut rates in December or January. Maybe after the winter they start talking about cutting rates again. Boom, then that's something that would be really bullish for precious metals. The market would start anticipating that in advance, and then the precious metals would be ready to make a move to newer highs, next spring or middle of next year.
Okay. Again, balancing out some positive and some negative factors. I still lean on the side of the more positive factors moving gold higher, but you know what? This correction that gold was going through, and I think still will go through, very much natural, and there are still the central banks being very easy monetary policy-wise, and we're not exactly seeing great data coming out of other countries, but you are right, data is backward-looking. Let's also talk about that inflation aspect where, quite quite frankly, inflation is just not picking up to the amount that central banks want it to. But in the U.S., we have seen some pretty consistent inflation data right around where the Fed wants it. However, they seem to be focused on some of the inflation data that is just under their goal of 2%. Do you think that, though, all this money that is being injected into the system by central banks and now even the Fed with expanding their balance sheet, that finally that could lead to some of the inflation that at least the gold bugs have been waiting for 10 years now?
It's a good question. I mean, where we are, if you look at the core CPI, I think that's actually like a 10-year high, which is surprising. If commodity prices were stronger, that could push up statistical inflation. I call it statistical inflation because it doesn't have any relationship to reality. So that's why I call it statistical inflation. I just don't think that statistical inflation is really going to run, Corey, until we get into the next economic expansion and we see even larger government spending, and we see like QE is starting to finance direct government spending. I think when we actually get the money hitting the economy itself and not financial markets, that's when we'll see inflation increase. And I don't know. I mean, if you look at your crystal ball and you tell me, well, we're not going to have a recession for 3 or 4 years, then maybe at the end of this cycle, we will see 3-4% statistical inflation. And and that in itself will move gold. But as far as over the next year or so, I mean, there's a possibility if the dollar goes lower and that really sustains, and we see commodity prices rebounding. Maybe we could see statistical inflation get to 3% or so. And that's that inflation scenario that would take some time, but would have ultimately benefit gold. But it's, other than that, Corey, it's really hard to say, if we're going to see this spike in inflation. I know that, some of the rise in the core CPI is attributable to the trade issues. So, who knows if that's going to be sustained, get even worse, or start to improve, because if it improves, then we'll see, statistical inflation come down a little bit. So again, Corey, there's several different possibilities of how this could play out, and it's just really difficult to predict which way it's going to go.
All right. Hey, fair enough. I know there's a lot of different drivers out there, but it seems like some of the main drivers, again, have just been this very inconsistent geopolitical news that comes out almost day after day, at least week after week. Can you share any targets that you are watching, though, for either gold or GDX on the charts when it comes to either some near-term moves or some mid-term moves, please?
Well, the key levels for gold, I mean, you have initial support at 1420 to 1425, then you have 1400, and the big breakout went above 1370. So it wouldn't be a surprise if gold came all the way back to 1370. I'm not saying that's going to happen. I'm not predicting that. I'm just pointing out these are levels that we have to keep in mind. With respect to GDX, that has come down to, I think, the low 26s in the last day or two. There's really strong support around 24 and 25. But, I mean, if we see this correction, have some more legs to the downside, I wouldn't be surprised if we ticked 23 at GDX at some point. Again, I'm not predicting that. I'm just leaving it out there as a possibility. But I'd be more focused on 24 and 25. So that for GDX, and again, back to gold, 1400, 1370, that's the big picture range that I would be looking at. We're still in a correction mode here, Corey, and we're trending lower in the gold stocks, and we have gotten a few nice bumps to the upside, but I still think it's more likely than not that there's more downside to go on this correction, and that's why you want to be patient with your cash. You don't need to jump into anything immediately unless something looks like an absolute bargain. That's what I'm doing. I'm looking. I've built up some cash, and I'm looking at some names, and I want to see how these things perform. When we see precious metals, gold and gold stocks in particular, trend towards those support levels I'm talking about. When that happens, I want to see how, a handful of stocks I'm looking at, how they respond or perform or act and then kind of evaluate from there if I should buy them immediately or continue waiting.
All right, Jordan, we're going to wrap it up there. Thank you for sharing some of your insights, especially some of those targets. The lower targets, remember, you're not predicting those levels, but you are saying that they are still very much in the cards, and something to consider is that even those lower targets are still a bullish, I think, long-term charting action for the precious metals, especially gold, and also important to decipher kind of the push and pull factors that are definitely having their role in gold right now. Jordan, thanks for taking some time and joining us. Have a great rest of your day.